It hit like an earthquake. One day the global financial system hummed, the next it teetered on collapse. Remember 2008? Markets plummeted, banks stopped lending, panic ensued, the world held its breath. The epicenter, the American housing market, subprime mortgages bundled and sold as safe investments, defaulted en masse. Dominoes fell. Lehman Brothers, a titan of finance, crumbled. Governments scrambled, injecting trillions to avert total meltdown. The aftershocks reverberated globally. From Wall Street to Main Street, jobs vanished. Savings evaporated, homes were lost. The true cost? Incalculable human suffering. This wasn't just a financial crisis, it was a crisis of trust. Trust in the banks, in the markets, in the very system that underpinned the global economy. Something had to change. The 2008 crisis exposed gaping flaws in the global financial system. Decades of deregulation had created a system of dizzying complexity and opacity. Risk was hidden, leverage maximized. Institutions deemed too big to fail took reckless gambles, knowing taxpayers would foot the bill if things went south. And south they went. The watchdogs, asleep at the wheel, failed to see the warning signs. The crisis revealed a fundamental lack of transparency. No one, not even the experts, truly understood the labyrinthine web of financial instruments and interconnections. The system, built on trust, had eroded into a breeding ground for greed and recklessness. The need for a new paradigm, one based on transparency, accountability, and individual control, became glaringly apparent. In the aftermath of the 2008 crisis, a revolutionary idea began to gain traction: Bitcoin. Conceived in 2008, just as the financial world imploded, Bitcoin offered a radical alternative. Bitcoin, a digital currency, operates on a decentralized network, no central bank, no government control. Transactions are recorded on a public ledger called the blockchain, visible to all. This transparency, a direct response to the opacity of the traditional financial system, is a cornerstone of Bitcoin's appeal. Transactions are secure, pseudonymous, and borderless. Bitcoin's fixed supply, capped at 21 million coins, stands in stark contrast to the inflationary nature of fiat currencies. This scarcity, coupled with growing adoption, has fueled Bitcoin's rise as a store of value. Bitcoin's early adopters were a motley crew: cypherpunks, libertarians, tech enthusiasts. They saw in Bitcoin a tool for financial empowerment, a way to opt out of a system they no longer trusted. The community grew organically, driven by a shared belief in Bitcoin's potential to disrupt the status quo. Miners, using specialized computers, secured the network and validated transactions. Developers, working open source, refined and improved the underlying technology. Exchanges sprang up, facilitating the buying and selling of Bitcoin. Slowly but surely, the infrastructure for a parallel financial system began to take shape. Bitcoin, the once obscure experiment, was gaining momentum. As word of Bitcoin's potential began to spread beyond the tech-savvy circles, the media took notice, reporting on its meteoric price rises and the growing chorus of believers. Entrepreneurs flocked to the space, building businesses around this new technology. Venture capitalists opened their coffers, pouring millions into Bitcoin startups. The price of Bitcoin, once mere pennies, soared to dizzying heights. Fortunes were made and lost overnight. The digital gold rush was on. Bitcoin, once dismissed as an internet curiosity, had captured the imagination of the world. It became a cultural phenomenon, a symbol of innovation and change. Bitcoin's meteoric rise has not been without its share of controversy. Its volatility, while attracting speculators, has raised concerns about its suitability as a currency. Governments, wary of anything that threatens their control over money, have grappled with how to regulate Bitcoin. Some have embraced it, others have sought to restrict it. The environmental impact of Bitcoin mining, which requires vast amounts of energy, has also come under scrutiny. Debate rages on about the sustainability of its proof-of-work consensus mechanism. Despite these challenges, Bitcoin has endured. It has weathered market crashes, regulatory uncertainty, and technological hurdles. Its resilience is a testament to the strength of its underlying principles. Bitcoin's true significance extends far beyond its price fluctuations. It represents a fundamental shift in how we think about money and finance. Its decentralized nature challenges the very notion of centralized control. It empowers individuals, giving them direct control over their assets without the need for intermediaries. The blockchain technology that underpins Bitcoin has far-reaching implications. Its potential applications extend to supply chain management, voting systems, and digital identity. Bitcoin has sparked a wave of innovation in the financial sector. Thousands of cryptocurrencies have emerged, each with its own unique features and use cases. The financial landscape is being reshaped before our eyes. Decentralized finance, or DeFi, is building a parallel financial system on the blockchain, offering services traditionally provided by banks. Stablecoins, pegged to fiat currencies, provide price stability while retaining the benefits of blockchain technology. Central bank digital currencies, or CBDCs, are being explored by governments worldwide. The lines between traditional finance and the crypto world are blurred. Major financial institutions are investing in blockchain technology and offering crypto-related services to their clients. The future of finance is uncertain, but one thing is clear: Bitcoin and the ideas it represents are here to stay. Bitcoin's journey is far from over. It continues to evolve, with ongoing development and improvements to its scalability and functionality. The Lightning Network, a Layer 2 solution built on top of Bitcoin, promises faster and cheaper transactions, further expanding its utility. As adoption grows, so too does the network effect. The more people use Bitcoin, the more valuable it becomes, creating a virtuous cycle. Bitcoin has the potential to revolutionize not just finance, but many aspects of our lives. Its impact on the world is only just beginning to be felt. The 2008 financial crisis was a wake-up call. It exposed the fragility of a system built on trust and the dangers of unchecked greed. It also planted the seeds for a new era of finance. Bitcoin, born out of the ashes of this crisis, offers a glimpse into a future where money is decentralized, transparent, and accessible to all. The road ahead is uncertain, but one thing is clear: the financial landscape is changing, and Bitcoin is at the forefront of this transformation. The future of finance is decentralized, and it belongs to the people.